In my opinion, based on seeing setups like this, when these sort of setups finally go, they tend to go pretty fast and pretty hard. And I don't know where the supply is going to come from to meet demand from higher prices. It's one of those ones where it's had such a long period in the doldrums that it's hard for me to see where it's going to come from.
Righto, buddy boarders. Easter Monday special. Sam Broom from Sprott. You think Sprott, you think Eric Sprott. You think Sandvik Ground Support, you think Derek Hurd. They're pretty much exactly the same. Don't you think?
There's one difference, and that's that I don't think Eric Sprott's been involved in Sprott for like 10 years, but Derek Hurd, mate, he's been at like DSI, now Sandvik Ground Support for 30 years.
He's not leaving.
He's been there forever, and he's not leaving. I think
he's not going to give up like Eric Sprott.
It's the only. It might be the only job he's ever had.
Yep, mate. And because he knows there's so much still to come out in the ground support world. Like, mate, after as I've seen the self-drilling posi mix bolts and the bloody resin injection technology that's going to be put on Sandvik jumbos. Derek Hurd wants to see this through, and it's not going to be the last thing he sees because he is going to be making ground support till he's pushing up daisies. I'm telling you that right now. Mate, revolutionise the industry. Go Sandvik, go Derek Hurd, and what did you talk about with Sam Broom?
We talked about a lot of stuff,
back to Sam Broom. Yeah.
We talked a lot about gold. Gold is a top of the list for anyone that kind of works at Sprott, but very interesting coming off the back of some of the predictions. Money miners might know Sam Broom because he featured in our investor sort of funding predictions for the upcoming year. So he had some very interesting picks. He's also located in North America, so he's got a bit of a different kind of lens to the world that we kind of have here down under. He sort of talks about the investor sentiment towards gold, the ETF flows, all these kind of things. And
you can tell his style of investing is really, like looking for contrarian things where you can have a differentiated view to what the market's pricing, have some patience, back good projects, good management teams, and get the reward. But interestingly, not a contrarian view right now is the love for gold, and he actually thinks it's quite early there, which is which I did find interesting. Yeah.
On a contrarian sort of vein of thought, we did speak about vanadium, we spoke about platinum. Silver hasn't quite got the love yet, so there are a few other metals that we touch on that you put in the more hated than loved basket at the moment, and a whole heap more as well.
Yeah, very good. Right, let's get into it. Sammy Broom.
Sam Broom from Sprott, thank you very much for making the time, your evening, our morning, to chat all things happening in our very volatile markets at the moment.
Yeah, thanks, lads. Pleasure to be here. Thanks for having me on.
The pleasure is absolutely ours, mate. We really enjoyed your brief perspectives when we dialed you in for our kind of end of year fundy predictions, and a lot has changed in the few months since we recorded that. I mean, markets are seemingly very volatile. I think there's certainly opportunities abound, and there's at the same time kind of, the macro landscape is changing. Tariffs are moving absolutely everything. How are you just taking stock of the market we're in and how it sort of translates to the metals stocks that we're all interested in?
Mate, she's been an absolute cracker of a start to the year, hasn't she? Gosh, I guess 2020 was pretty volatile to start the year, but this would probably have to be up there as one of the most volatile starts to a year I've had in the business. Obviously, the macro landscape has arguably completely changed in the last sort of 2 or 3 weeks. The tariffs that the Trump administration have come up with are materially larger than even the sort of most hawkish kind of expectations going into this whole shenanigans. So, look, we've had crazy levels of volatility. I don't think we're done with it. We've had a couple of days of calm now. I dare say we're probably not out the back of it. Net, I think probably the biggest beneficiary of everything that's been going on is probably the precious metal space. The gold market has a weird knack of knowing what's going on ahead of time. A lot of the time, you could argue it rallied ahead of the COVID crisis as well. Obviously, gold second half of last year had an absolute bender of a run into this. So, just at a very high level, I think it's no longer the contrarian trade, clearly, but I can't see how the precious metals trade, or I at least see extremely good risk reward even from here after the run we've had in the precious metals trade, just given the sheer dislocation in the global financial system and trading dynamics of the world moving forward. As a Kiwi guy living in the US, I feel like I have a pretty unique perspective to be able to see things from both sides. And I just can't see how this doesn't completely alter the whole US dollar as a reserve asset of the world status. And it isn't going to change overnight. It's such a huge behemoth that it's going to be one of those things that the changes that result from all this last for or play out over years. And I think that trend's only going to become even more entrenched. There'll be some volatility along the way, but gold's probably the big winner. In the very short term, at least, anything related to global economic activities, arguably the loser. We've seen some big downdrafts in a lot of the base metals. Energy is doing it really tough. That is the logical first order thinking, at least in the short term. In saying that, I think we all know what central banks around the world and governments are going to do if things get bad enough, right? They're going to turn on the spigots of easing and stimulus. Again, we're already starting to see some signs of that, or at least discussions about that happening. So I don't necessarily think it's going to be as bad for some commodities as it might seem right now. And even then, you've still got copper north of $4 and things like that. That's on top of China's property sector basically being in a depression for the last couple of years. So a lot of these things are actually holding on better than I would have expected, given what's going on in terms of economic activity. And I think it actually bodes quite well, perhaps 6 months plus out once we get through this kind of crazy phase where no one quite knows what to do or think. So that's kind of the real high level take. Probably nothing too nuanced there. It's probably consensus at the moment, but this is kind of one of those events that's so sort of kind of out of left field that consensus might be the place to be for the time being.
Credit to you, Sam. When we spoke in December, your non-consensus pick was a weaker US dollar, and it was a bit out there. You were sort of reading the tea leaves of what was happening in the macro land and the so-called Mar-a-Lago Accords, all these sorts of things. But that's turned out to be quite a good pick. But we'll save your flowers for the end of the year. Let's dive a bit deeper into gold, Sam. So I'm curious to hear, to start with, how the dynamic is over where you are, because here you can't walk 5 meters without someone telling you what the gold price is. But what's that sort of like for you based in the States now?
It's completely different, mate. I mean, as someone who's spent a bit of time in Aussie, where gold is a part of the general discussion on, investing and things like that. Here in the States, it's still very much I would argue, a fringe asset. I got a mate who's a financial, generic, financial advisor. Got clients, whole portfolio, whole net worth with them type of thing. They have, last I checked, they had zero allocation to gold. It's not even a consideration, and you're just part of your broader portfolio. And that's physical gold, let alone mining equities. That's just straight gold exposure. If I had to guess, I bet you the average, gold exposure in the average US portfolio is sub 0.5%. It's probably even less than that. And there's data on that. There's ETF, gold related ETF, total net asset value is a percentage of total ETF capital, and it's like, at the moment it's like sub, I think, where have I got it here? The gold mining exposure is a sub 0.3% of total ETF AUM, right? At its peak in 2012, it was at nearly 1.5%. So we're a fraction of what we used to be, at the last cycle peak for gold. So it's an afterthought right now. It is. I will say it's probably changing. It's at some point, for a lot of my career, discussing with institutions, like, owning gold is almost a career risk for a PM over here, or it has been. I do think that's probably in the early stages of changing. but it's still very much fringe assets. Probably not quite the right term, but it's certainly an afterthought for most PMs. You here in the US, large cap tech, NASDAQ, all that type of stuff has been the only game in town for the better part of the last 15 years, and really the last 25 years with a few blips here and there. So there's been no real need to go out and own other assets. So it is definitely different over here in the US. It's not as mainstream as it is in Aussie. Even Europe, it's a lot more mainstream from what I gather. Obviously, China and Asia and third world countries where you've had to deal with currency debasement and store of value type issues much more severely than here in the US. It's mainstream, but here it's still very much under the radar.
I'm surprised, Sam, hearing you. Like, I know you're a contrarian at heart, but I'm surprised hearing you say the precious trade is the most attractive kind of way to to play the current environment, given it's clearly in a bull market. Gold's clearly in a bull market. So what are you doing to measure kind of how far or how deep that bull market might be? I think one thing the tariff news really did flip a switch in terms of my thinking about gold. I'm always at Sprott. You can't really be a Sprott and not be bullish gold, right? It's kind of in our DNA. But I really do believe that it's a worthwhile portfolio diversifier. But when that tariff news hit, it's basically a message to the world that, to me, it read like the US does no longer wants the privilege of the world's reserve currency, the privilege and the burden, right? There are downsides to being the world's reserve currency, especially on the manufacturing side, and that's clearly something they're targeting. So, a lot of money gets made by following what governments and central banks are telling you that they're trying to do, right? And to me, that's what this announcement, a huge part of what this announcement was aimed at doing. So I think the tariff announcements really kind of kicked gold into being really, really important here, because there is really no alternative, right? You're not going to see large capital going and buying, European bonds or Japanese bonds or Chinese bonds en masse. There isn't really an alternative other than the US dollar and gold. So I think that ratchets up. There are, in terms of the more specific nitty-gritty stuff as to why I still think it's fairly contrarian. Gold itself's had a great run, right? And generally that's been put down to central bank buying, right? Central banks don't buy gold ETFs, they don't buy mining equities, mining ETFs, they don't buy silver. So that's why some of these other parts of the sector are still relatively lagging or aren't receiving a ton of interest. Just go and look at the flows into and out of both, something like, the gold mining, the gold bullion ETFs and the mining ETFs, right? GDX, the biggest gold mining ETF, has absolutely hemorrhaged capital this year. It's had, I think it's lost 15 to 20% of its shares outstanding this year to outflows, right? And this is with the price going up, whatever it is, up now 30% on the year or something like that. So I dare say at market tops, you're not going to be seeing steady, sustained outflows, right? You're going to be seeing the opposite. You're going to be seeing money flying in. On top of that, on the equity space, financing activity, IPOs, all that sort of activity is still relatively low. I think 2024, I think I was reading the other day, was like the worst year for IPO activity on the ASX on record or something like that. And obviously that's beyond just the gold space, but it's generally been quite a hard environment, particularly at this smaller end of town. Like when you get to sort of mid and end of bull markets, you have just rampant speculative activity, small caps flying, money just gushing in. Like 2021 was a bit like that, right? When the sort of everything bubble, when I think there was a counter to last year, there was record IPO activity on the ASX, there was just money flying around everywhere. I had clients keep
closing up shop with me because they were only up 100% on the year when they were making 300% over somewhere else. You know what I mean? Like that sort of stuff. There was definitely more of that sort of a vibe. We are completely at the opposite end of that today, despite where gold is, despite the mining equities starting to move. It just feels very, very different today from my perspective with a North American-centric clientele.
Are you excited about sort of silver in that precious space? Are you one of the people that still think that has value as a precious?
Yeah, I mean, people are starting to look at it as, gold's run, they've missed the boat. Silver hasn't really run as much yet. Is it going to be the next, it's going to be the way to play the game that hasn't moved yet. I definitely am a silver bull. I'm kind of been a reluctant silver bull over the years. Some of the people involved in the silver space can get a bit annoying sometimes, but I actually do think that the silver space looks quite interesting. We're staring down the barrel of what looks like it's going to be the 5th year in a row of supply deficits. It plays that kind of dual role as a precious metal and an industrial commodity, right? So it's kind of hard to pick. And as I said, the main thing driving gold right now is central bank buying, which they don't touch silver. So it's hard to know exactly when it's going to go. But from a more traditional commodity supply demand standpoint, things look quite interesting. Technically, I like to use technicals as part of my timing. It's not perfect. It's not the be all and end all, but it can be useful. Looking at a silver chart, for me, it looks like it's sitting there ready to go. And we all know when silver goes, it tends to go pretty hard, and it tends to be a pretty fun ride. So I like silver. I think it's worth owning silver. Finding quality mining equities can be a little bit tougher in the silver space. There aren't that many, but we have a handful here that we quite like. We think are going to do quite well. I do like silver. I do. I own more gold because I find it easier to find things I like. But I think silver as a commodity is 2025 going to be the year I think it could be.
Rounding out the precious sort of spectrum, I know you've been thinking about platinum for years now, and it's never quite been the right year to buy.
Tell me about it.
17 years in the making.
I bet its technical chart kept looking like it had bottomed out over and over and over again.
Is the day coming closer?
Poor old platinum, eh? I mean, find me another commodity that hasn't had anything even resembling a bull market for that length of time. I think 2008 it topped right with the GFC. Look, I like it. I personally own it, to be honest. Just the metal. I think it's like silver on steroids. I mean, if you like silver, I think for similar reasons, right? They're both sort of quasi-precious, almost industrial metals these days. It's kind of been left for dead on the, this narrative that demand was going to evaporate because we're all going to be driving EVs, and in reality, the death of at least the hybrid car has been greatly over exaggerated, right? And in fact, that's been one of the strongest growth segments, which hybrids tend to use more PGEs than traditional combustion engines. So there's a nice combination of fundamentals that make platinum continue to look interesting. I might be bald by the time it finally moves. I don't know, but you look at that chart, and gosh, when that thing goes, it's going to be one of those. Well, I shouldn't say it's going to be. In my opinion, based on seeing setups like this, when these sort of setups finally go, they tend to go pretty fast and pretty hard. And I don't know where the supply is going to come from to meet demand from higher prices. It's one of those ones where it's had such a long period in the doldrums that it's hard for me to see where it's going to come from. So I continue to like platinum. I continue to grind my teeth here waiting for it to move. But I do think sometime in the next couple of years, something's going to happen there.
Old bloody cross-boundary energy might be an investment for Broomy to make and waiting for platinum. Like if this platinum's going to stay down there, maybe this could be an alternative. Like the Norwegian Investment Fund. I don't know if they're in platinum or not, but they're in CBE. 40 million buckaroos into that, probably on the back of the Kamoa-Kakula baseload renewables project that you discussed last week, mate. CBE, I think people are going to be lining up to hand over cash.
It's phenomenal, mate. Yeah, the likes of Norges tipping into CBE. It just goes to show how what a force this company is when it comes to providing energy to power the mines we need, mate.
What a vote of confidence. And, mate, when that energy you speak of, this is like build, own, operate, hybrid power stations all across the world. Check out this bloke in red circled. You won't forget him. That is Tim Taylor. He's the Australian man to talk to bloody get CBE power in your mine site. Absolute world-class leaders.
Would you call him the tool man?
Tim the tool man Taylor. He has the tools to give you the power. I love it. Right, let's get back into Sam Broom. Put your money into CBE, Sprott.
I don't think we can talk about platinum or PGMs in general without touching on the geopolitics. What do you make of, I think when I last heard you speak about South Africa, they were sort of on the up. They were coming into an election. So, yeah, I mean, South Africa and then broadly Zimbabwe and Russia is a bit of a dark horse in there, perhaps more with palladium. But what do you make of the setups in those countries?
South Africa, I mean, obviously South Africa is like, 80-something% of supply. It's huge. It's basically the whole market. Look, frankly, South Africa's probably gotten moderately better. It probably is improving, and sometimes there's money to be made when things go from as bad as they can get to just, slightly bad. So I still don't think you're going to see huge amounts of investment flow into South Africa. So I don't think you're going to see massive supply responses from CapEx getting spent in South Africa. I just can't see that happening in the near term, say the next 3 to 5 years. It's just that I just can't see it. I mean, then you go to the next down the list is Zimbabwe and Russia, right? And they're even less likely to receive capital investment to increase supply. So, that's part of the bullish mid to long term story for platinum.
There certainly is like a bunch of money to be made when you bet on the changing political regime before everyone else has kind of factored in what that could really look like. Because effectively, if the risk appetite changes or the the discount rate is lowered because of a regime change, that's a big difference to the valuations of the equities. Just look at if you had bought Argentinian stocks or equities on the announcement of Milei becoming president, or even a week later, before the rest of the world had kind of figured out what that could actually mean for the change in capital for that jurisdiction, you would have made plenty of money.
Yeah, no, absolutely. I mean, you can argue there are other places like Colombia might be on the cusp of that with the elections there going on. Ecuador just had an interesting election result. Even Brazil
Interesting.
might improve.
What are you seeing there that gets you interested in those South American jurisdictions? Yeah.
Oh, there's a shift towards the right. More business friendly, potentially mining friendly administrations. So it's a general trend around the world, right? I mean, Trump, it's the Trump kind of syndrome, right? There's been a lot of left-leaning governments in power through much of Latin America for the last 5 to 8 years. And the pendulum swings, and it's swinging back the other way in a lot of parts of Latin America. So Milei, obviously in Argentina, is the example you guys brought up, but it's happening in a few places. Latin, if we're going to talk jurisdictions that might be interesting for that kind of dynamic, looking at places potentially opening up, the whole Latin America is looking quite interesting on that front.
Did you sort of catch, we spoke about not too long ago comments from Scott Besson and the US in general being pretty pro Latin America and wanting to get on side in Latin America and not see what happened to Africa with regards to Chinese influence happen in Latin America as well. Did you catch sort of that?
I didn't catch that interview, but I have heard it. I mean, it seems like the current administration wants to create, or at least a sort of light version of America's sort of trading block for key critical, critical materials, commodities, things like that. Obviously the big winners from the recent tariffs with Canada and Mexico, for example, right, that kind of avoided the worst of the tariffs. So I didn't see that, but it does fit with the messaging and the sort of reading between the lines that's coming out of Besson and the members of the Trump administration over here.
On the flip side, sometimes a government can go from being relatively pro-business to much less pro-business. And one place I'm observing that kind of really play out in recent history is Indonesia right now. The new administration that's come in there is juiced up or proposing to juice up the royalties and effective tax rates on a lot of the nickel producers in that region. As a contrarian at heart, are you getting very interested in the nickel space once again?
That's a very interesting question. We spoke a little bit about nickel just this today on that sort of a front. I've kind of been a big nickel fanboy for forever. Nickel cobalt, when I first started at Sprott, was kind of, I had a little hunch that it was going to have a little run back, I think it would have been 2016. And so I've been kind of following the space relatively closely since then. There's obviously been some big ups and downs. I mean, in Indonesia, you guys probably know more about that. In Perth there, you're just stone's throw over from Indonesia, from us. But obviously it's hugely important to the nickel market, given I don't know what percentage of global nickel supply is Indonesia these days. The nickel market for me has always been one of those ones that, because it's so concentrated in Indo, all it's going to take is like you said, a moderate deterioration in conditions there to have quite an outsized impact. I did notice in my nickel portfolio last night on the ASX a bunch of stuff, moving around. So I don't know if that was to do with an announcement in Indonesia I might have missed. Maybe you guys can tell me.
Yeah, but, not. I don't think there was one overnight, but about I want to say best part of a month ago, there was like a proposal for coming out from the administration, which has only been in power for about a year, and the proposal was to change the effective royalty rate on like various intermediate nickel products all the way kind of up the spectrum. Like in so much, I think the royalty was going from like 9% to a minimum of like 14%, scaling up to 19% depending on the nickel price. So it kind of just like would really effectively cut into the profitability of a lot of the companies. And keep in mind, a lot of those companies they invested and they built in the industrial park. I forget its full name. The Morowali Industrial Park, because they had like a 10-year tax holiday or an 8-year tax holiday. But what good is a tax holiday if you don't have any tax to pay because you're not making any profit because the royalty's been jacked up?
Yeah, well, I mean, even the Chinese backed, the new supply, the HPAL stuff coming out of Indo, I mean, they must be hurting at these nickel prices, right? They can't be making a heck of a lot of money at these prices. And then, like you said, I mean, Indonesia's, they don't want to give this stuff away, right? So it's not surprising that we're hearing this. Obviously, it's a hugely environmentally destructive method of mining too. So, we've been hearing about pushback in country for quite some time about, not everyone's a big fan of in Indonesia what's been going on over there in the nickel space. So, look, I don't have any specific insights onto whether there's going to be any imminent changes there, but it is something that I think if you're a nickel fan, you got to keep a close eye on, because it wouldn't take much to upset the apple cart over there, and all of a sudden the nickel space goes from being probably one of the most contrarian hated commodities out there right now, like that and cobalt, and maybe lithium's vying for the most contrarian setup right now. I do see more potential in nickel for some sort of disturbance to the market than lithium if I was going to have a go picking a bottom commodity.
There was another commodity as well, Sam, that you put forward, and I wouldn't put it in the hated basket with those other ones because I think people just don't care about it. But vanadium is one you'd spoken to us about, and you sort of spoke to the narrative of a bit of battery demand picking up. It's obviously still an alloy or used in the steelmaking process as well, but What's the latest on Vanadium world?
Yeah, I seem to be a masochist and love these sort of either completely, unfollowed or majorly beat up commodities. So Vanadium piqued my interest sort of mid last year as I started reading these articles about these sort of massive vanadium redox flow battery complexes supposedly breaking ground in China. So since then, the vanadium prices, I guess the benchmark prices are slightly up over the last month or so, but probably down on when we had that conversation. So it's only gotten worse. It's this commodity that was, pentoxide, if we're using pentoxide, was, north of $30 a pound at the last cycle back in 2018. It's sort of $5-ish a pound today. So, 85% lower than where it was at cycle peaks. Really bombed out. You've got, a number of prominent producers either battling bankruptcy or close to it. Almost the entire cost curve underwater.
How much primary vanadium production is there, or is it largely like a co-product of?
The co-product's probably 70% of the market.
Yeah.
That's the production that comes as part of the steel making process. It's like the vanadium bearing slag at the end. China and Russia dominate that market as well. So there is this sort of security of supply angle to that one as well. If anything really goes pear-shaped, I keep checking my, export ban news every morning to check to see if vanadium was on that list. Anyway, so it's just that it just ticks a lot of the boxes I look for if I'm really trying to get contrarian and buy something that's really wasted and bottomed out. You can get completely obliterated playing this game, right? It's kind of one of those situations where, and because there aren't very many ways to play it, but it's sort of a complete wipeout or a 10-bagger from here type setup, right? And it's probably 50-50 odds each way, and picking the timing's extremely tough. Obviously, the main use for vanadium right now is a steel additive. So global economic activity, China property slump, they're all not bullish at the moment. Although there were new steel regulations in China that came into effect last year, which in theory should, increase vanadium consumption by sort of 10 to 15%, if all else being equal. I think steel demand is going down at the moment, so that's probably offsetting any of those potential gains. But the real step change catalyst is the sheer quantity of these vanadium redox flow batteries that are supposedly like in construction or very close to it. Like these aren't in permitting phase. These are getting built, or very close to breaking ground. The number, as I've seen quoted, are so large that I can't believe them. There's just not enough vanadium to suit them, which does make me question the thesis, right? When something sounds too good to be true, or the numbers look too big relative to the markets involved, it does make you pause a little bit. But even if a fraction of them are true, I mean, it's gonna drive a material. It's going to take VRBF demand from sort of sub 10% to 20, 30, 40% of total vanadium demand within the next couple of years. So, and that's under sort of lowest case discounting scenario. So I think it's interesting, very hard to play, not a lot of ways to play it, highly speculative, but the contrarian in me couldn't help it. So
I'm
that's one I've been following.
I think I'm going to have to do some homework on that myself. There's no doubt. There's a type of business in our world, Sam, that are just remarkable businesses, kind of hard to replicate, hard to emulate, but royalty businesses are just like beautiful businesses. We don't have many listed on our wonderful exchange, but over in North America, there's many. What do you make of the royalty players at the moment, and kind of their appeal to investors, amid any kind of market moves versus the equities?
Great question. I love the royalty business model. I'm surprised it's
Sprott's got one.
as popular in Aussie. I guess we do. Private royalty fund there. I mean, it's probably partly a function of the tough markets we've had. Most of the last 10 years has been pretty tough going in the mining equity space, particularly the precious metals equity space, which is where we do a lot of our business. Through that, the better run royalty companies have generated by far the best returns on average. A lot of that is you get all the sort of optionality to the commodity price without all the risk, the mining risk, inflation risk, margin compression risk, all of that sort of risk that goes with the mining equities. On the flip side, you can argue they're not quite as leveraged in a full-blown bull market experience. You look now, for example, where gold's just gone from $2,000 to $3,200 an ounce. On paper, a lot of the mining equities are going to have a lot more torque in terms of earnings growth, free cash flow growth per ounce of production. You look at some of these big royalty companies, right, and they're $30 to $50 billion companies doing $1 to $2 billion of revenue a year, and they've got like 19 employees, right? They're just capital light businesses in a capital heavy industry, which as a business to me is a really good business model. There's kind of a saying that you date the mining companies, but you marry the royalty companies, right? It's kind of like they're great sort of long-term hold vehicles, or much more applicable to that kind of approach than, say, trading your way in and out of cycles in gold or in the mining equities. So I like them. They're kind of like core parts of my client portfolio. They're ones I tend to touch less. I'm less tempted to trade and sell. You look at some of the larger cap North American listed precious metals royalty companies outperform the Nasdaq during from 2012 to say now, right? Most of which was a bear market for gold up until the last couple of years, or at least a flat market. So they've generally got very high return on equity, things like that, return on capital invested. They also have a lot of embedded optionality to things like exploration success, right? You probably hear Pierre Lassonde talk about Franco's founding royalty and what he paid and how much it's paid back since, given the sheer quantity of exploration success they had that then turned into future ounces, right? They didn't pay a cent for. So when done right, I think the royalty business model is really, really good. I will say today it's kind of been found out, or the market has bid it up to much higher multiples than the mining equities. So on paper, the pushback I usually get is great, but they're very expensive. I push back on that a little bit. I don't think markets are stupid. And I think they bid it up for a reason. I don't think the better run royalty companies are ever going to be cheap. I think they're always going to trade at a higher multiple. But if you're bargain hunting, they're not the absolute most bargain place you could probably look right now.
Yeah, they are.
Why do you? I'm curious for you guys. Why do you think they're completely absent from the ASX? Is there a cultural reason there? What's the thinking there?
I don't personally think it's a cultural reason so much as just a function of the success of the American ones. Like they happen to be listed there. Like we do have Deterra, and that trades well. People love it. Generalist investors will flock to it for iron ore exposure if it sort of fits their parameters and stuff. So in part, I think it's a kind of quirk of history that Wheaton and Franco just happened to be there.
We didn't have the oil and gas analogs either for the early investors to, and because there are these like beautiful dynamics of the royalty business is that it's quite hard to compete with the existing royalty business who's already doing well because they have the lower cost of capital. Yeah. So capital kind of flows that way. And the other part too is like I think the ASX has much more forthcoming equity capital markets. So even royalty financing vehicles have a hard go here because companies are a lot more apprehensive about royalty finance versus equity finance if the equity's there on the table for kind of obvious reasons.
I do know a couple of people in these parts that have made a bit of money from royalties.
Totally. Yeah, and that's the irony too. Like our billionaires, like Gina, Clive, Bennett's, like that's royalties that have made them.
Kept them private and kept the cash flow flowing to them.
Oh, if you get lucky to get involved in the right royalty space, I mean, they're magic assets, you know, as long as you pay the right amount for them or you get them at an early stage. So
yeah, arguably the best
I'm a big
business
fan.
model. Last sort of question that came to mind with all the stuff that is happening in the States, are you a bit more bullish about mining projects in America, or do you think the red tape and where the States is at is like that ship sailed a long time ago?
You know, I think you can afford to be a little bit more bullish here. I mean, the US was tough, has been tough for most of my career. I mean, people always talk about, you know, jurisdictional risk in places like West Africa and, you know, Latin America and places like that. In our experience, in terms of realized risk, like I've probably got bitten more by US-based projects getting the permitting kibosh or something like that than I have my assets taken off me in West Africa, right? So my personal view was that, and possibly still is, the US has a lot more risk than people gave it credit for. I will say, you know, under this administration, it does seem like the permitting process is going to get much more streamlined. So I do think it's worth dusting off your favorite US assets. There's clearly going to be a push for domestic production of a whole range of different critical materials. So if you were gonna buy assets or companies in the US, it's better today than it has been any time in my career, arguably. And it's probably not just it's not just the US either. I mean, Canada's now looks like it's going to get serious at rolling back red tape and reducing the sort of duplicate components of its permitting system. You know, now that it's kind of had a bit of a shake up too, that things aren't always going to be honky-dory with their neighbor. So I do think permitting projects in North America in general just got a little bit better in the last, call it 6 months or even less, whatever it is, 5 months. So
last one from me, Sam. You transitioned from GO to portfolio manager. What's one thing you didn't appreciate as a GO that you kind of had to come to terms with when you became a market animal?
Gosh, you know, market animal management quality is so important, right? When you're a GO, you sort of just look at the rocks and think, you know, that it's the be all and end all. Once you start managing money, you realize that crappy management will do a really good job of screwing up great rocks for you if you're not careful. So, you know, to the point where now I'd take an average deposit with a A+ crack team over the other way around, to be honest. I've learned that lesson the hard way a couple of times in my career. So, you know, that's probably the big one. And it comes down to a whole bunch of things from, you know, capital management to, there's a whole range of factors involved. But I'd probably put that one easily as my biggest learning lesson now being on the capital market side.
I think that's a fantastic point to leave the conversation on. Thank you so much, Sam Broom, for joining us on Money and Mine.
Cheers, guys. Appreciate it. Great to be on.
Thank you, mate.
Sensational. Thank you, Samuel Broom. I wonder if it's Samuel. I reckon it'd be Samuel.
I reckon.
Yeah, let's run with that. And let's run with going to the GRX conference, May 20 to 22nd. Make sure you use the bloody code. You get a discount. I'm going. I can't wait. It's the centre of tech and innovation, and there's some freaking good keynote speakers going to be there, mate.
Get your tickets.
Wait. Get your tickets. Links in the show notes. Our great partners also, MMS, Grounded, Sandvik Ground Sport, CRE Insurance, K-Drill, WA Waterboards, Go Gero James, Quattro, KCA, Black Diamond Drilling Services, and mentioned in the show, Cross Boundary Energy. Hooroo.
Hooroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation, or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation, and needs.